I'm bringing Fred Banyan in now of American Investment Trust Services to talk about the market action and especially what's going on with Apple and Alibaba. I know these are stocks that you own, so good to have you here to talk about the situation.
It's good to be back.
Now, one of the things I'm seeing and I'm hearing from traders, and we've talked about on the show, is that Apple has a big squeeze going on. There were people who were short this stock. I think the situation was probably about the same for Alibaba as well. What do you think about the shorts who are coming into this market and they're trying to play these stocks that they want to go down, but instead these stocks are going up?
Well, there are a number of factors that are holding these companies up. You know, obviously the fundamental story, you know, the earnings and revenue growth is one thing. The tug of war that's going on, I think, is between investors from all different iterations, let's say. But where are investors going to go?
But then you have big hedge funds, though, in the market, and they have been playing these stocks, Apple and Alibaba, to the downside.
I think that a lot of these guys they understand I guess, the business models, but they're not accepting the models.
Do you think the models have changed?
I think the technology has changed everything. I mean, the way you do business. Drones are about to start delivering pizzas. And it's just technology, and you know, whether you're talking about Lyft or Uber or whatever, it's changing the landscape of different business models. You know, the cab drivers don't like Uber, so Apple and Baba, you know, and Alibaba, that, you know, of course everybody is looking at them as the Amazon of China. China, as their economy continues to mature, they're not building brick and mortar malls. They're delivering this stuff. And so the way we do business and deliver business, you know, has changed dramatically over the last 10, 20 years. And I think it's just going to continue to change more and more.
So some financial firms might not actually be keeping up with this. Is that what you're saying?
I think that they are ignoring it. Maybe, you know, if you're short, obviously you're not buying into the fundamental story. And then some of them even go so far as to say it's cookbooks, or the numbers don't jive well. Take a look at Alibaba.
And Amazon. People said that for a long time about Amazon.
And Amazon wasn't going after net income necessarily. They wanted to reinvest their money into grow revenue and market share. And they've done a great job. Now they're starting to deliver on the bottom line. So, you know, this is a free market investment world. So if you want to short something and your convictions are there, you're free to short it. But for individual investors, you may not have the wherewithal to hang in there until a stock goes into their normal corrections. You know, if you shorted Apple a year ago, up until about a month ago, you're happy as two hogs in slop. But you know, if you shorted it say a month ago, you may be hurting a little bit, and you may have to cover it. You mentioned something about short squeeze. There are people who are looking at covering their shorts now, which gives a little bit of an extra boost to the stock price performance.
Right. Now they are forced to do something because they wanted the stock to go down. It's going up, so their margins get called. What do you think about Apple, Amazon, and Alibaba, the big 3As? Do you think these stocks are heading higher ultimately?
The AAA.
The AAAs.
I think you know, not going to comment too much on Amazon. Obviously, it's delivered. But on Apple, I am personally, you know, we're long Apple and Baba, and so yes, I think both short and long term, there's still some upside potential.
Well, thank you for coming on the show and giving us a brief lesson. Thank you.
Good to be here.